It is earnings season in Nigeria, and this time we are speaking to Udom Emmanuel, who is CFO at Zenith Bank. Thank you very much. We would like to take a look at your Q3 numbers as expected. Okay, first of all, before we go to the numbers, obviously Godwin Emefiele took over as CEO just at the end of July, and analysts are asking what is going to be different under his leadership in terms of strategy and execution for Zenith Bank.
Thank you. Godwin Emefiele just took over, as you said, as the new CEO. But if you look at Zenith top management structure, these are people who have been together on the average of about 18 years, on the average, working together, understanding themselves. And the strong score point about Zenith is the shared values that we have in the system. And looking at, in terms of things that would change, there might not be so much change because this is already an institution that has a very strong brand. We'll just build on the brand already that we have, and then we'll try as much as practicable. The whole world is moving towards risk management, high level of corporate governance, and we intend to actually strengthen our own cause on that and make sure that we deliver based on the promises we've made to our shareholders and our other stakeholders.
Now let's talk on something obviously which should impact on your strategy. The new banking rules announced by the central bank, which will do away with universal banking. Where does Zenith Bank stand? Everybody anticipates that you will remain an international bank, but are you going to embrace the whole core structure, for instance?
If you look at one of our major strengths, which is in terms of our core capital, our core tier 1 capital, and you look at also central bank categorization of international, regional banks and national banks, you could see that we actually qualify for international bank. And also right now we have our presence in Europe, we have our presence in other parts of Africa, and with our strong capital, we should do international banking. But coming back to the whole core and other structure in place, I would like to say that we still have time to actually come up with a definite plan and a definite structure. And we hope that between now and probably the end of Q4, we should be able to come up with a definite plan on our whole core structure.
All right, now let's touch on a few things the analysts are talking about with regards to the Q3 numbers. The OPEX line has been very, it's giving some people some concern. In Q3, we saw it increase relative to Q2, even though year on year we've seen your cost-to-income ratio come down to about 67%. But what's responsible for the increase, and where are you feeling the pressure?
I would not say we are feeling the pressure anyway, because I keep saying here that the emphasis is on being more efficient in the system. Actually, if you compare year on year, you could see that our cost-to-income ratio is actually declining. If you plot the graph and look at the trend, it's actually coming down. If you compare Q1 to Q2 up to Q3, it's actually declining. But if you're picking between Q2 and Q3 in absolute terms, some of those major cost items are just purely seasonal. And I'm sure if you compare the same third quarter, just single quarter with third quarter of 2009, you will see that it's almost the same pattern. So some of those cost structures, some of those cost items are purely seasonal. And you know, costs are mainly into controllable and non-controllable. And this specifically, I'm talking in terms of controllable costs.
So like, can you give us some examples of?
There are basic things, things that have to do with the infrastructure, probably the operating environment and so on. I don't think we have control over those ones. We must incur certain costs to run the business.
Okay, let's speak of, so what's your target cost-to-income ratio then?
Well,
because you're at 67 right now.
We try to look at what's the industry doing, irrespective of the number of branches, irrespective of, you know, our systems or our strategies in place. We try as much as practicable, because the watchword here is efficiency. And right now we are doing 67. We hope to just play alongside the industry average, which today right now I think is about 60.
Right. Okay, now let's talk about the loan book. We've seen that up about 9% from Q1 to Q3. Because loans obviously is a big issue in Nigeria recently. We've seen private sector loans only inch up recently for the year. But with regards to Zenith as an institution, where are you lending to right now?
We are known over the period to be playing in the AAA rated segment of creation of risk assets. We lend mainly to industry leaders. Leader in each of the sectors of the economy. If you take the telecoms, they are the big players there. You take the manufacturing, the big players, the food and beverages. We play in these AAA rated names, and mainly the growth are in that direction as well. We've not actually gone down in our risk acceptance criteria at all.
Are you looking to stay with that strategy going forward? Because some might argue that the margins on those businesses are coming down because obviously those big names are quite pricey when it comes to interest.
For now, if we have some lessons to learn with what has actually happened in the global market in the past 2 years, I think it's just safe to stay within the AAA rated names and allow the interplay of the market to determine actually where the next direction will go to. But based on actually what had happened in the past 2 years, it's just safe to do that now. You know, we're a very conservative bank, and it had been a strategy in the past 20 years. We cannot just overnight change that strategy, except there are major changes in the world direction of financial services.
Okay, and very quickly, because I have to wrap up now, the contribution of non-banking subsidiaries like an investment banking was significant in the numbers that you just released. In fact, as much as 4 billion to profit. But Zenith is not really known as an investment bank. Where is the money coming from?
I'm not sure you're quite correct to say Zenith is not known as an investment bank, because what services do you render under investment banking? What products do you offer under investment banking? We've done these services to a large corporate. Definitely, if you play in the market we are playing, you must have some products of investment banking characteristics that you must render to your top customers. And what attributed to, what we can actually say contributed majorly to the profit was we had some briefs and we won some mandates during that period with our large corporates, and some fee income actually came in, and that's where we had the growth in that profit.